Here's a chart pattern with a friendly name and a friendly meaning, the bull flag. It literally looks like a flag flying on a flagpole. And unlike the scary head and shoulders, this one is usually good news. It says a strong move is probably about to keep going. Same simple idea drawn right on the chart. Let's raise the flag. Every flag needs a pole, so that's where we start. Imagine a stock suddenly shoots straight up, a big, fast, powerful move higher as buyers rush in. On the chart, that steep jump looks like a tall, straight pole. This is the flagpole, and it tells you there's real strength and excitement in the stock. Something got people very interested, and they bought aggressively. That burst of energy is the setup for everything that follows. Strong pole, strong move. After that big sprint up, the stock needs to catch its breath. Instead of crashing back down, it drifts sideways or gently downward in a small, tight, orderly range. That little calm patch, sloping slightly against the trend, is the flag itself, the cloth flying on the pole. The key word is small. The pause is modest and controlled, nothing dramatic. It's like the runner who sprinted, then slows to a light jog for a moment, not collapsing, just resting before the next push. Why does the flag form at all? Simple human behavior. After that sharp jump, some early buyers take a little profit, which nudges the price down gently. Meanwhile, new buyers who missed the first move are waiting, watching, getting ready to jump in on the next push. So the stock pauses, but the demand is still there, coiled up underneath. The flag is that quiet moment where the stock isn't losing strength, it's just gathering it, building energy for another leg higher. Then comes the payoff. Price breaks out of the top of that little flag, and the uptrend resumes, often with another strong push higher, roughly like the first one. Those waiting buyers pile in, and the rally continues. That breakout from the flag is the signal traders wait for. The pattern is basically the market saying that big move wasn't a fluke. After a quick rest, here comes the next leg. A flag is a continuation pattern. It says the trend that was going is probably going to keep going. Here's the trap. Beginners see any pullback after a rise and yell, bull flag, buy. But a real flag is small, tight, and orderly, a gentle rest. If instead the price drops hard and messily, giving back most of the flagpole's gains, that's not a flag. That's the move failing, maybe even reversing. The whole point of a flag is that the pullback is shallow, it shows sellers are weak and buyers are just pausing. A deep, ugly drop tells the opposite story. Small and tidy is a flag, big and messy is a warning. And of course, there's a flipped version, the bear flag. Everything's upside down. First a sharp move down, that's the pole pointing the other way. Then a small, gentle drift upward, the flag. And then price breaks down out of the flag and continues falling. It's the same idea, a strong move, a small pause against it, then a continuation, just pointing down instead of up. Bull flag, the uptrend rests and continues up. Bear flag, the downtrend rests and continues down. So how do you trade it? First, spot the strong pole and the small tidy flag. Then wait for price to break out of the flag before acting. That's your entry signal. Put your stop loss just below the flag because if price falls back into it, the pattern's failing and you want out cheap. And for a target, many traders measure the height of the original flagpole and project that same distance up from the breakout. Whole flag breakout and you've got a clean plan with defined risk. So here's the whole thing in one sentence. A 5-year-old could repeat. A flag is a strong move, then a small, tidy pause, then the move continues in the same direction. Bull flag continues up, bear flag continues down. It's the trend catching its breath before the next leg. And that's the bull flag, a flag flying on a flagpole. A powerful move up, a small orderly pause, and then the trend picks right back up. It's the market resting, not quitting. Spot the flag, wait for the breakout, and keep your risk just below it. If this made chart patterns click, subscribe because we explain every scary trading idea like your 5, one at a time. This is for learning only, not financial advice.